Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking energy. Have to talk crude oil, with crude oil now down 9.7% from its highs. WTI reached a high on May 22nd of about 72.90, reached down to 75.80 today. That is down, 65.80. That is down 9.7% from the highs. And that is pretty close to officially being correction territory for bull versus a turn down. So a correction is defined as anywhere from 8 to 10% lower. We were within 0.3% of that 10% level. So on the lows, we reached correction territory for this recent bull market in crude. Doesn't mean it's going to bounce from there, although it did a little. Again, lows 65.80, and today's settlement was close to 66.78, down about 1.64%. And when you see moves like this, you got to reference the Brent WTI spread to see what's been going on. Again, Brent only down about 6.5% from its highs, so not really in official correction territory yet. Brent finished down about 1.4%. So WTI is taking the brunt of the hit, and that's because of U.S. production. Now, U.S. production can only push WTI so far. This is the widest Brent WTI spread in 3 years. And what that means is WTI now becomes attractive for buyers in Asia and other markets to actually pay the shipping, the freight, to get it from the Gulf ports out to their locations and their refineries. But there's a little bit of trouble with that. The Permian Basin is a good example, 300,000 barrels being shipped out of the Permian Basin, but yet in terms of pipeline rail capacity combined, there's only room for about 320,000 barrels a day. So they're going to reach a cap in terms of how much crude they can actually get from the Permian Basin as well as the shale patch altogether to the Gulf ports to ship that crude oil. So there is a balancing act there. We got the WTI, or the Brent WTI spread, close to $9 earlier this morning, and then it pulled back a little bit, getting closer to about $6. But when that spread gets wide, you see a demand for WTI, and that pulls inventories out of storage. Rig counts on Friday up 15. That's the highest jump since February. So again, that U.S. production continues to pile on. In addition to the news we heard last week that OPEC and Russia are likely to agree to a little bit of boost of production when the production cut expiration comes in the end of 2018. There is no definite for that, but that is definitely what's helping to push crude oil down, and some of the geopolitical tensions also weighing on the Italy situation, for example, with the collapse of their bond market and potential new government vote coming in 6 months, affecting the possibility of global growth. And then some Fed speakers also talking that the Fed should back off because growth globally isn't as strong as they thought it was. All of this pushing crude oil down for a 5th straight session, and again, down 9.7% from the high in May to the lows we reached today. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.